Hi, everyone. My name is Junhong Kim, a moderator for this panel discussion. I spent 30 years in finance and tech, the last 7 years in digital assets, founding a couple of blockchain companies here in Korea. Before I start, I should confess that I have two phobias, public speaking and English. But anyway, I'll do my best. Let's go. For this special panel discussion, of actually welcoming two extremely distinguished global leaders who are very difficult to have in one place. They are Fernando Vazquez, president of Chainlink, and Yuval Luz, co-founder and CEO of Digital Assets. Please give them a big hand. Could you please introduce yourselves and tell us what to do?
Sure. I'm Yuval, as you mentioned, co-founder and CEO of Digital Asset. We created a public layer one called Canton Network. My background is also in trading technology. I was at Citadel and DRW Trading. Got into crypto and digital asset space in 2012, and then started my company in 2015.
Yeah, one thing, Yuval, you made the DAML, right? DAML.
Correct. The smart contract language is DAML.
Most of the Web3 ecosystem is actually doing a Solidity and an EVM smart contract. Could you please tell us the reason why you made it?
Yeah, we needed to create a smart contract language that actually works for financial institutions and not just a funny money language. We'll talk in more details, but when we wrote the white paper for Canton and DAML in 2015, we thought about not just building another layer one for the sake of building another layer one, but actually came at it from more first principle of what do regulated entities need to worry about when it comes to securing their assets, securing their client information. And we just felt that EVM and Solidity specifically were not able to meet those needs, as we've seen with many hacks and information leaking and other fun things.
Thank you.
Yeah, thank you for having us. I'm Fernando. I joined Chainlink 3 months ago as their first president. We at Chainlink, we secure around $8 billion worth of stablecoins from a number of issuers. We are provided what we think are the features that you need to have institutional grade stablecoins that support institutional grade use cases. In my previous role, I was the CEO of SBI Digital Asset Holdings in Japan. And in that role, I was quite involved with our friends from Circle, and we helped them bring USDC to Japan. It was a pretty painful journey, so maybe I can share some of the learnings, right?
Yeah, sure. Yes. Well, many folks in Korea actually think that stablecoins should float freely on permissionless public blockchains such as Ethereum, valuing the decentralization and anonymity as the most important value. But I have it's just a personal opinion, but I have a slight different opinion on that. For stablecoins, we need compliance, privacy, and interoperability. From that perspective, we have the most important players in the market in this session. All right, first question. And it's a bit stupid. If stablecoin really takes off, do we still need banks?
So I think it's, first of all, not a stupid question, and it's a question that a lot of people ask themselves. Do stable coins and just generally speaking, digital asset disintermediate some of the existing players. As a former trader, the way I actually look at a bank is a credit extension, right, to clients, and therefore they manage risk. I actually think that stablecoins create opportunities for banks to create better products. Now, I think that there's nothing new, that new technology is going to disintermediate some of the existing players that just don't know how to adapt to new technology. So as everyone knows, Blockbuster had an opportunity to buy Netflix, and they decided not to. And there is no more, it's only Netflix now. So I just don't think that technology by itself disintermediate. It's the lack of the adoption of the technology that disintermediate. So we are going to see banks issue stable coins. Banks have a huge advantage that their network is already connected to millions and millions of clients that are not just doing payments. They're actually borrowing money for mortgage. They are borrowing money for their business. You still need to know how to manage risk. If you are going to get loans towards your business, if you're going to get loans towards your house, you still need to have institutions that know how to extend credit. Today, it's primarily banks. Tomorrow, we might have new entrants. But I think that banks, if they adopt the technology and kind of lean in, they are actually at an advantage compared to new entrants. And that's why, you're seeing companies like Circle trying to become a payment company. But some of the banks, I mean, if you look at JP Morgan and Citi, for example, they're one of the largest payment companies in the world. Now, the question is, and we have a former very senior person from Citi, will these large institutions be able to take advantage of the technology and lean in? Generally speaking, that's the biggest challenge of large organizations, is that from a corporate culture perspective, they're not very good at disintermediating themselves. They're kind of like trying to protect themselves until one day they realize that it was too late. So that's generally speaking the challenge that I see with large institutions.
I'd like to have one comment, you don't mind?
Sure.
Some people don't realize that there are other types of cash on chain. Stablecoin is one example, but there's also JP Morgan, Citi, and others also working on so-called tokenized deposits. Because the fear of the banks is that, if you see outflows from deposits to money market funds, the balance sheet will become smaller, and then they cannot lend as much as they wanted to. But I think the thesis of some of these banks is that, look, if you tokenize deposits, you don't deplete, that part of the balance sheet. And at the end of the day, what I think finance needs is cash on chain. We're going to have programmability, composability, you name it. But I see a world where, you look at the taxonomy, we have stable coins backed by money market funds and potentially other assets, and you also have tokenized deposits. At least that's my thesis.
I'll add just to make it a bit more real. So on Canton Network, already today, we are processing close to 10% of the US repo market. So about $350 billion of repo transactions. And as Fernando said, you're going to look for what is the cash leg. I think that the future of stable coins or any type of cash on ledger is going to look like we think about collateral in capital markets. Mm-hmm. So there's quality of collateral, right? So US Treasury, number one. Then you have JGBs. Then you have gilts, Eurobonds, and they start going down, down, down in terms of the quality of collateral. You could start thinking about stable coins very similarly, which is who is the issuer of the stable coin? And again, this is where I think that banks, whether it's true or not, will have a much higher credit rating or maybe quality of a stable coin, that at the end of the day, if you are a large hedge fund or a large asset manager, you would prefer to transact on chain with those type of stable coins rather than with someone else. But again, I think that this is more of a short-term thing. I think over time, and there's a few very important issuers of new stable coins, as those issuers will show their value and their ability to execute and manage the risk properly, they will become and move higher and higher in that credit worthiness.
Thank you very much. Yeah. Let's move on to the second question. Actually, we are moving from unregulated to the regulated area of stablecoin. The legislation on stablecoin in various countries is creating another regulatory fragmentation, such as USDC US, USDC EU, USDC Japan, probably in the future USDC Korea. It's the same USDC, but it's different as before. Will it eventually become similar to the legacy correspondent banking model and CLS network, which might also cause side effects such as de-risking, friction cost, and other inefficiency? Or is it still better than what we have now? Fernando, could you start? Yeah, you have the experience in Japan and Hong Kong in Asian countries, right?
Yeah, so the issue in Japan is that you were not allowed to actively manage the underlying. Mm-hmm. So if it's JPY denominated, you need to put, basically the equivalent amount in cash with the trust bank. That is not generating any yield, no interest payments. You cannot actively manage it. If you brought something like USDC to Japan, even though it's already backed by money market funds in the US, you need to bring, again, equivalent amount to Japan. So you have like 100% over collateralization. From the point of view of the user, it doesn't really matter. You get what you want, cash on chain. But what happens is that you cannot build a viable business model around it. So the issue becomes the supply side. The user gets what he wants, cash on chain, but it makes it really painful for issuers and those who want to, again, it will have to effectively subsidize the money market, the stable coin itself. So I see this fragmentation as potentially stifling innovation. It will mean that in many countries, you will not have a viable stable coin because there's no viable business model that you can build around it. That's what I see as the main challenge, this fragmentation.
I think a few things. I think that sometimes people think that the risk with stablecoins is that now everything is, they hold, it's fully backed one-to-one. The reality is, and again, this is where I think that understanding the risk framework of different stablecoins, there's still risk. And even the risk is not that the issuer will do something that is not legal, but there's just operational risk. A good example is Circle, which is kind of like considered to be like top of the list in terms of those that do it right, didn't manage their exposure to Silicon Valley Bank correctly, and they could have lost a lot of money, right? So I think that one of the things that we at Digital Asset and Canton Network are trying to do, we just announced about a month and a half ago a partnership with DTCC, where you can actually hold treasuries natively on Canton. So today, most stablecoin issuers hold their reserves off-chain. You don't get to see their reserves as a holder of the coin. And therefore, you are exposed to that risk. You don't actually get to see the reserves. And we're kind of back to today's world where really what you're holding is a liability by an issuer, and you have a lot of trust in that issuer, no different than how you have a trust in your bank to manage the reserves properly. So one of the things that I think we're going to start seeing is the ability to actually see through and to see the reserves in real time. Chainlink issued a product of proof of reserves. Those type of innovations are going to reduce the risk. But at the end of the day, it's important to understand stable coins are not risk-free. And I think it's extremely important. The other thing that I would say it's about stable coins, which is related to what Fernando said, which I was very happy because I just I saw the example about K-pop. I think that a lot of people get excited. You look at Japan, for example, they had stable coins for a very long time, but they haven't found the killer use case. And as a result of that, it never picked up. I highly recommend for Korea to make sure that whatever use case that they pick is something that is backed by usage, because what will happen is a lot of energy, a lot of effort will go on in, and then no pickup will happen, and the backlash would be much bigger because it's like, look, we did all of this work, all of this money invested, and nothing came out of it. So I would actually say stay more focused, pick something that will be, success on day one, and then grow from there rather than trying to go too wide.
Actually, I couldn't agree more with you, Val. I think
네, 제가 생각했을 때는 이제 규제들과 그리고 정책과 관련해서 당국에서 고려하는 것이 아무래도 자금 세탁 방지가 되지 않을까 생각이 듭니다. 그래서 저희가 실제로 이렇게 비즈니스
Actual use case, and you don't give the private sector time to innovate. Why? Because they're losing money every time they issue an additional yen. So again, this transparency really serve what Yuval and his team are doing. I think can bring this level of transparency that will make hopefully regulators and legislators comfortable when it comes to legislating.
Yeah, even in Korea, we don't have T-bills, which means that the shortest government that is 1 year. So we don't have any non-deliverables. And in formulating the reserve, we also have a problem. Professor Jae-won Chair will address that issue when he's actually doing his speech. Well, let's move on to question 3. Actually, we have observed how dollar stablecoins have rapidly expanded globally, operating unregulated on permissionless public chains. In response to that, major reserve currency countries such as Europe and Japan have swiftly developed relevant regulations to address this issue. Genius Law explicitly stipulated a reciprocity, right? But considering the different tax rules, currency sovereignty, a partial currency control, and actually financial stability of each local countries, would it be normal or reasonable for a non-reserve currency country like Korea to adopt the same regulatory framework as the United States and others? Or could there be something to be addressed?
I honestly don't see Korea giving up on their own sovereignty, and certainly, and the currency is a big part of that. So I think we'll keep living on a fragmented world when it comes to legislation. And I think it's up to us to build compliance engines and frameworks that would allow, the financial markets to operate as stipulated by the law. And I think that's doable. Canton has smart contracts. I'm pretty sure you can build the necessary logic around it so that you are maybe a Korean tax resident try to send KRW to me, a Japan tax resident, we do the right thing. While following, again, all the strict limits that you impose on your currency. Because that's your decision, it's not the chain's decision.
Yeah, so I mean, we chose the name Canton because in Switzerland, as you know, Switzerland is built from many cantons, that every canton has its own sovereignty and control. Our prediction was that not every country will have its own, a lot of people talk about harmonized rules all over the world. I also like to dream about all kinds of things. It's just not going to happen. So when we build the network, our view was you need to allow every country or even every corporation to be able to set its own rules and then harmonize over one network. So even when you think about the same country, if you're a bank versus a media company, you have different rules that you have to comply with, and you'll have to have different settings of permissionless versus not, and hence the name Canton. I think that there's always going to be people that try to break the rules. I've always advocated that actually blockchain gives regulators better tools to enforce the rules than the other way around. And therefore, again, similar to my earlier point about embracing technology, I actually think that if regulators, rather than being scared that this technology can help people, break the rules, actually lean in and learn how do you actually use this technology to actually enforce the rules better.
That's a really important point to get across. I would argue that the technology to do stablecoins properly is already there. You need privacy, you could work with the content. If you need proof of reserve or on-chain compliance, you can work with us at Chainlink. So the solutions are already there. It's just a matter of sitting down and and creating the standard for the industry.
Yeah. Let's move on to the technology. Right. That's about the technologies that support stable coins. South Korea remains trapped within the dichotomous debate between permissionless public blockchain and private chains. But for last few years, we've seen something else more advanced than realistic approaches, such as a JPMD or Canton network, right? Yuval, can you give us about the ideas and the alternatives that you have?
Yeah, to be honest, I just think that this whole permissionless versus permissioned is a bit of nonsense. All these layer 2s that call themselves public permissionless run a centralized sequencer, which effectively makes them into private chains. At the end of the day, even on Ethereum, which is public permissionless, you can build an application where you need to do a multi-sig, and by doing that, you have permissioned the application. So everything you could kind of figure out how to build it the way that you do. The way that we approach Canton is really how do you give the ability for control and privacy, which most chains don't. And last week Ethereum announced that suddenly it took 11 years for them to understand that privacy is important. The problem is that all of these networks built without having privacy in mind, and now they're coming and hoping that they can bolt on privacy as an afterthought. Generally speaking, that's not a good idea. And therefore, a lot of times, zero knowledge proofs, which I think you called out in the beginning, and I like the distinction that you made, is synonymous with anonymity, not privacy, which again, does not work well with regulated institutions. My co-founder is one of the creators of zero knowledge proofs, and we decided not to use it because again, it doesn't go hand in hand with regulation that is much more privacy on a need-to-know basis. Meaning, if I'm the issuer of a stablecoin, I need to be able to see all the transactions. If I'm a regulator, I need to be able to see all the transaction. But if I send you a stablecoin, Fernando doesn't need to know about that transaction, right? So that's just the way we approached it. You said it's all about the technology. I'm actually waiting for the day we don't need to talk about the technology, and we can actually just talk about the business outcomes and the use cases that we drive.
Thank you.
I totally agree with you about this distinction between private and public is a bit artificial. Even public can build an identity and privacy overlay. So again, it's not a relevant point, I think.
Yeah, actually, we'll talk about more about the use cases in session 3's panel discussion. Yeah, but it was a very important comment from both of you gentlemen. Let's go a little bit further into the future, like actually about the real future of digital finance. If you look at a couple of decades in the future, what's how do you imagine that the stablecoin will bring to the society? I'm really sorry for such a vague question, but I just want to give you a room for creativity.
Sure. I mean, I actually think it's a great question. And I think that we are going to see in the future effectively a real-time movement from any asset to any asset. And no different how cash today is the glue that connects asset. But because of settlement times and rails being separated from one another, the ability to move between assets has a lot of friction. What you're going to see is that friction goes away with stable coins or on-cash solutions being the glue like today. And therefore, you're going to be able to see applications like anytime as an investor, I sold an asset, immediately use a stable coin to move it into a yield-bearing product and vice versa. And if you're thinking about it as a financial institution that is doing treasury management, today you have to predict into the future, right? What are your capital requirements globally? Because things don't move in real time. Just imagine if you're a global institution, a global capital markets player that have Basel capital requirements. And now imagine that wherever you have money in the world, you could capitalize your legal entity in real time if you need to. That, in my opinion, on average, translate on average to something like a 20% reduction in capital costs. That, from an impact on the financial market, is huge. it's a huge return for the financial market. So I think this is going to play a significant player with financial institution, even corporates from a treasury management perspective. And I also think that that eventually will flow down into the retail customer that will be able to see much more efficient products offered to them.
Kind of adding to that, maybe I will summarize what Yuval is saying towards mobility and utility. Mobility is these with which you can move the value, potentially cross-border, without breaking the rules in Korea or any other country that has put some restrictions in the movement of the money. And there's a utility piece. Actually, we are working with a name, fortified company that wants to have exposure to stablecoins. Why? Because once you have the stable coin, you can easily put that into a yield-bearing asset class. That's something that we learned from DeFi. Of course, in DeFi, many people ignore the rules. It's not regulated. But now we are seeing a number of, proper institutional grade DeFi pools, pop up. And once you have that, and you can move things in and out of such a a DeFi pool that gives you the yield that you might need. Or the other way around. I might buy a tokenized private credit fund, and maybe I can send that to a DeFi pool where I can borrow some a Korean won denominated stablecoin against it in real time. No friction.
Yes, it was actually that's all for today, and it was really good to hear from both of you gentlemen, and I learned a lot from you, and I hope this discussion will actually be very helpful for the financial institution players in Korea and the regulators also. Yeah,
you did a great job in English. It would have been worse if we did it in Korean. So nice job.
Hey everyone, welcome back to Verified Market Insiders. I'm Elizabeth Copeland, trader and financial journalist here at Verified Investing. And today, we have a very special guest, Max Gachman. He is the Deputy Chief Investment Officer at Franklin Templeton Investment Solutions. And Max oversees investment research and portfolio management at one of the world's most established asset managers. But what makes this conversation so unique is we're not only talking about crypto, we're also talking about building an infrastructure of tokenized products. And with just days left of 2025, Max is here to share his macro outlook into the new year and Franklin Templeton's vision for where digital assets fit into institutional portfolios. So we're going to dive all into that today with Verified Market Insiders. All right. So Max, thanks so much for joining me here today. Listen, we're literally just days away from the close of 2025, and we're heading into a new year. Now, what are we looking at right now? What's top of your mind as we're heading into this, whole new year?
Well, there's so much going on, right? We've had a pretty remarkable year, really strong performance, but with a lot more volatility than we've seen in a little while. And I think that may be a trend we see recur. The macro picture is changing. The economy is slowing down, but it's slowing down in a way that I think is manageable. So I think the macro setup for next year is actually looking pretty good. But look, we've seen a lot of things come out of left field in 2025. I do think that trend continues. And of course, we're going to have a brand new Fed chair in the US. And I think that's going to be another interesting development.
And I mean, like you said, we've seen a pretty interesting year with strong equities. We've got, bonds finally offering yield again. How are you and institutional investors like yourselves positioning yourself for asset allocation right now?
So it really depends on your horizon, as always. So for more tactical portfolios, we are still overweight equities. We'd like to call it responsibly bullish. We're really looking for sectors and regions where we find a bit more asymmetric upside relative to the downside. For more strategic portfolios, where we're really looking at, up to 10 years out, we're really positioning much more within regions outside of the US, like including Europe, including emerging markets. We really find that there's a lot of attraction and a diversifying potential and return upside of privates, both infrastructure, direct real estate, and private equity and even private credit.
And you mentioned the Fed earlier. It's been in a pretty tricky spot trying to navigating inflation concerns and also trying to avoid over tightening as well. How is that policy backdrop really shaping your positioning?
So on the more near end, we think what's going to happen is probably until Powell gets replaced, you might get one more cut in there. It really depends on the economy. And I would also mention that it's really important investors remember that if the Fed starts cutting a lot under Powell, it probably means the economy is doing worse. So that's not necessarily what you want for healthy stock market returns. Now, on the flip side, once Powell gets replaced, whoever replaces him, whether it's Warsh or Hassett, we expect to see pretty significant rate cuts going into the back half of the year. And so it's really about, staying careful, responsibly bullish, as I said, and then probably getting a bit more risk on, assuming the economy holds up as we get into that back half and the market starts pricing that in. I would expect as we get much closer to that event horizon around April or so.
You don't have to love the system that we live in to stop being crushed by it. I hate that capitalism creates a hierarchy of worth, where essential workers can't afford essentials, and billionaires treat recessions like opportunities. I hate the...
Yeah, that's a good outlook. And, you also have mentioned macro expectations for 2026, and, you're responsibly bullish on that. Without giving away any of your top secrets, of course, what's the biggest macro theme you think the market isn't fully pricing in just yet?
So I think one of the biggest things that the market doesn't quite get is that there will be winners and losers in the AI trade. And we've seen this just, obviously like the Max 7, the hyperscalers, just all appreciate. And the reality is you're not going to have a future state where I would say Alphabet and Meta and Microsoft are all equal winners. Someone's going to take a much bigger share of the pie. And quite frankly, given the pace of change, you may have someone actually eat one of their rivals. And I don't think that's priced in yet. And I do think that'll be a theme, especially as we get, not in 2026 or 27, but as we get into 28 and further, I think that's going to become much more important to watch.
Yeah, more of a long-term outlook, especially some of those mega cap. That's really interesting. And going back to Franklin Templeton, managing stocks, bonds, alternatives, even crypto, like we said earlier, are you seeing institutional clients shift their mix really significantly heading into the year? Or are you seeing more of a steady hold?
So institutions, especially the largest institutions, rarely move on a dime. They're really much more like cruise ships rather than speedboats. But we are seeing a lot more interest in digital assets from institutions. I think there is an understanding that the space is maturing. Regulation across the world is becoming clearer. And in addition to that, we're also seeing more interest. It was already high, but we're seeing even more interest in privates. There is, even with yields, as you mentioned, going up, there's still that chase for even more yield. And so private credit continues to see increasing demand. Infrastructure is seeing higher demand. And I think as tokenization ramps up, you might see that shift beyond the largest institutions into the smaller institutions, wealth, and even retail investors.
That's really interesting. And that's also a great analogy. The institutions are more like cruise ships and speedboats, making bigger waves over a long period of time rather than just zooming around, making those quick moves. That's a great analogy, and also very helpful just in the context of the macro picture. But let's go ahead and zoom in more on Franklin Templeton's build for the future, their outlook on the future, especially on digital asset side, because I know that's a big part of your roadmap, and it's been an aggressive traditional asset manager moving forward. Franklin Templeton has in crypto and tokenization, which is pretty interesting. So walk us through your thinking on why a firm with decades of traditional investment management experience is going all in on more of the blockchain infrastructure.
Sure. Well, one of the reasons I even personally joined Franklin when I was looking at, where to go next after I had my smaller hedge fund, which actually was the first one to trade digital assets using artificial intelligence, kind of give some context and credence to some of the things I talked about earlier. It was because Franklin's an innovator. And I think that in this race to become the dominant asset manager amongst, the very few that are as large as us, there's going to be leaders and followers, and you have to be a leader in the space. You have to have conviction that you're going to pick the right trend and you're going to commit to it. And I think that's what we've done. The reality is FOMO isn't just a Wall Street bets theme. It is something that happens in the institutional space. It's something that happens with asset managers. So by the time everyone is jumping in to join us, we're going to be in pole position. And I think that is really the key.
Yeah. And speaking of leading, you're leading a new platform development, which is proprietary multi-asset operational system, which is pretty interesting. And for traders watching who might not be familiar with it, go ahead and let us know what it's called, what it does, and especially the digital transformation of investment process. That's what it is said to be. What does that actually mean in practice?
Sure. So the system you're referring to is called Mosaic with a Q at the end. And the idea with Mosaic is really to build something that allows us to invest however our clients need us to invest, using our own investment processes, and quite frankly, just say yes to a lot more complex client problems that as a solutions team, we're constantly being asked to solve. The idea with Mosaic is that there's many different ways to construct a portfolio. It may be through direct investing by picking securities. It could be a quantitative process, a fundamental process, a hybrid process. You could be using privates, you could be using publics, a mixture, digital assets as well. The idea is that Mosaic enables us to do all that at scale. And we're actually starting to offer up Mosaic to institutional clients as well. So to those institutions watching, please give us a shout. We'd love to show you what Mosaic can do. But it's a really unique piece of software. There's a lot of tools out there that help you analyze markets, that help you analyze risk, that help you trade. But there really hasn't been anything until we built Mosaic that actually lets you construct portfolios in a very comprehensive way without forcing you into a particular way of doing it. And that was kind of the most important thing, is we didn't go out and buy something or use another tool. We built something ourselves because we did not want to change the way we invest for fitting a particular mold. And that's what we're also going to offer to clients as well with Mosaic.
That is really fascinating. It sounds like first of its kind. That's going to be huge for a lot of investors. But we're looking at some of these tokenized assets for money market funds, bonds, eventually equities. What's the actual advantage for those investors? And is this just a tech upgrade, or is it fundamentally changing how some of these portfolios work?
Yeah, I think it is a pretty fundamental change. So, there's kind of this cliche that money never sleeps, right? The reality is money does sleep. It takes, it's going to take Christmas off this week. It takes the weekend off. It doesn't really, it kind of naps throughout the night with different markets open with different pools of liquidity. Once you go on chain, you actually are taking a whole lot of caffeine. You're really mainlining it because you will never sleep again. And what I mean by that is it's true 24/7, 365 settlement. It also means you can have features like what we introduced, which is intraday yield. So you're actually getting yield up to the second that you sell your security. And when you buy it, you're starting earning yield right away. Now, for a retail investor, that may not mean that much. For a large institution, that's millions of dollars potentially. So those kind of innovations are actually really important. It's another reason we're seeing institutions really start diving into tokenized assets and blockchain technology. And as we go deeper in, we're going to see a lot more development of smart contracts where you can have really complex derivatives traded very simply. And all of that just removes friction, whether it's time, whether it's complexity. It enables investors to trade the things they want to trade the way they want to trade them much faster and with a lot less operational risk. And I think that's another key thing to highlight. For a while, there was this perception that anything blockchain is, inherently risky. And I think there was like this link between blockchain and crypto. The reality is a lot of blockchain technology is actually much safer, more transparent, and can solve operational risk hurdles.
Yeah, and that actually leads me to my next question, because like you said, a lot of people think it's hand in hand, and a lot of retail investors see Bitcoin, Ethereum, maybe some altcoins as crypto itself, but you're approaching it from more of an institutional, infrastructure perspective. How do you think those everyday investors think about the difference between speculating on tokens versus investing in the underlying blockchain? So can you dive more into that for me?
Absolutely. And look, I think we can actually have an analogy in the stock market. So there's pink sheets, right? The OTC stocks, the ones that don't really trade, that well, that are, priced really low, that can get delisted, et cetera. I mean, that's the altcoin world, right? That's the meme coin world. And then you got your blue chips, which would be like your Bitcoin, Ethereum, your mid caps like Solana and Ripple that might become large caps at some point. And so what I think retail investors, at least savvy retail investors, started seeing, and actually, ironically, now institutions are starting to see, is that cryptocurrencies, and really we should call them digital assets because a lot of them aren't currencies in any way, shape, or form. It's not a monolith. Digital assets are inherently an asset class that has internal diversification. And that's something we're looking at in terms of how we model those different assets and how we construct portfolios with them. And it's something that we're educating our clients on. But interestingly, a lot of the savviest retail investors that especially that have been in the space for a decade or more, they really get it now.
Yeah, and you are there overseeing quantitative, fundamental, and manager research teams. How are these traditional research disciplines adapting to evaluate digital assets? I mean, are you using the same timeframes, or did you have to build an entirely new model?
So we're not reinventing the wheel. We are just inventing a new tire compound to put on it. And what I mean by that is we adapted existing models that we had. So for example, we have statistical models that are looking at things like correlations and regressions. Those are inherently highly adaptable to almost anything. So we can use those to analyze all manner of digital assets. Then we have cash flow valuation models, which can look at basically your discounted cash flow analysis. Anyone who's passed even their level 1 CFA exam would know what I'm talking about. And so we can adapt that to protocols that actually throw off cash flows. And network-based valuation models look at things like daily active users, the amount of wallets that are holding that currency, even alternative data like who on Reddit is talking about this currency. And for networks like Ethereum, for example, that can be a really powerful model. So all of those have analogies in the TradFi world, and it was really about adapting them to digital assets. Similarly, we think with digital assets, it's really important to have risk factors that focus on them, but we took existing risk models we had and we incorporated digital assets into them.
42 years old now. For the last 10 years, I've been getting paid $10, $15, or $25,000 for one keynote talk that I've performed in Italy, Spain, Portugal, Malta.
I mean, it sounds like you've got the infrastructure vision and the research backbone to you. I mean, let's also talk about what this actually means for positioning, because both Franklin Templeton and for individual investors, we're looking into 2026. Where do you see the biggest opportunities in asset classes? And more importantly, where are we looking at some of the risks that may surprise some people?
Sure. I mean, I would say in terms of the biggest opportunities, probably emerging markets. They had an exceptional run this year. They beat developed markets. But keep in mind that if we zoom out a bit, emerging markets have been downtrodden for some time. So I think the time for EM is going to continue. And when we think about the AI theme, yes, there's all the US hyperscalers, there's NVIDIA, but NVIDIA makes their chips in Taiwan with TSMC. There's Apple, but Apple uses a lot of South Korean facilities to make their parts. And so when I think about all of the benefits of owning an EM, a lot of times I'm really thinking about South Korea and Taiwan and other Asian economies outside of China that are actually benefiting from a lot of the global macro themes that have fairly supportive macro conditions and central banks that are generally fairly dovish. So that's a really good setup going into 2026 for EM, a continuation of the momentum we saw in 2025. Now, on the risk side, I think I actually would look domestically into the US. We are seeing some fading of US exceptionalism. I wouldn't go too far down the debasement rabbit hole, but I will say that we have seen more diversification amongst global central banks. A lot of the dynamics we're seeing relative to the dollar imply further weakening as both a 2026 and a longer term trend. And so that can actually make for a fairly significant risk for a lot of US investors who have a home country bias.
Yeah, that's really interesting. And speaking of that, we've got the US election behind us, potentially regulatory clarity coming for crypto and traditional markets, trying to figure out, where we're landing, soft or hard. But how do those puzzle pieces fit together in your 2026 outlook?
Well, the interesting thing is I'd actually say we have another really important election in front of us that's actually closer than the one that's behind us, right? We've got the US midterms. I think with election dynamics in general, the best idea is to fade the headlines until you get closer to the date. So, probably through the first, almost 3/4 of the year, we're going to be not paying too much attention to that. But as we get into certainly September and October, that's when we'll really start paying more attention to the election news. I think that could have policy ramifications. What's more important and more near term, as we talked about earlier, is who is going to be the Fed chair? What's their plan going to be? I think there's a lot of questions about what the Supreme Court is going to decide, for example, as it relates to Governor Cook. And, if she's allowed to be fired, I think that opens up quite a Pandora's box. Probably means a lot more rate cuts near term, but potentially a lot more concern, I would say rightfully placed, in my personal opinion, about the independence of the Fed. And So those are more of a near-term risks we're looking at. I think this is going to be a year where, we have our quant models. They're really robust. They don't quite track things like Supreme Court decisions. So my fundamental research team is going to be real busy getting into the weeds and the depths of what's happening in Washington.
Yeah, and that's going to be something really interesting for everyone to look out for, whether institutional or retail investors. But Max, here at Verified Investment, we also deal with a lot. I mean, institutional investors maybe watching that would be awesome. But a lot of our Verified Investing members are retail investors. And retail traders, retail investors, they're trying to balance, it seems, more traditional portfolios with now kind of getting some crypto exposure, at least if you're kind of on the later bandwagon, if you're more traditional, just starting to slowly creep into the crypto world. What's a reasonable way to think about allocation and the time frame to use that?
Sure. So from an allocation perspective, really simple rule of thumb, this is what we would give to institutional investors as well as retail, is don't put more than a fifth of your risk into any one asset class. So it's really important to switch to a risk mindset from a notional percentage holding mindset for retail investors. And it's a different way of thinking, right? When we consider crypto allocation, even in an all equity portfolio, an allocation of, say, 7% to digital assets could eat up a fifth of that risk budget. When I think of a more 60-40 portfolio, it may be 4% or even 3%, depending on the volatility of the digital assets that you pick, that eats up that fifth of risk budget. So I think once you look at the standard deviation of returns, to, I guess, give it a little more concrete definitions, really think about how much that volatility is adding to your portfolio. And it does require a bit more sophistication, a bit more getting up to speed, but it is absolutely critical. The other thing is, because of the volatility of the asset class, it's really important to rebalance your portfolio more often. And that should help you both tamp down your volatility over time and also should help you with returns over time. But if you're an investor who rebalances your portfolio once a year, if you're going to include digital assets, quarterly should be your bare minimum. And I would, in many cases with higher digital asset allocations, recommend a monthly rebalance as well.
Yeah, and like you said, the rebalancing is so important, and especially with the volatility that we've seen this past year and that you expect into next year. Am I correct in saying that?
Absolutely. I don't think we're going to see crypto volatility go away anytime soon. I think with more institutions coming in, you will eventually see a trend down, but I wouldn't expect that with even just a regulatory uncertainty that we may get some clarity on. That itself, near term, can actually create more volatility. And
would you say that would be the most compelling, whether in equities or crypto, compelling kind of asset to look at right now? I know with allocation, in consideration, is that what you're kind of looking at for 2026 as well?
I think there's a lot of compelling reasons for digital assets in 2026. And yes, regulatory clarity is a key theme. We are seeing more institutions come in. At this point, over 90% of Bitcoin trades, for example, are at over 100K USD. So these aren't small retail traders moving the markets. And I think that is a really important point. So as more institutions come in, you want to be on their side. It's a trade that's worked well in most asset classes. And from just, my experience, having a lot more institutions come to me and say, hey, how do we look at adding digital assets to our portfolios? How do we offer digital assets to our clients? And so I think that trend is going to continue. And it's going to be a global trend, not just a US trend as well.
Well, I tell you, Max, talking about want to be on the institution side. I've been on the other side of institution as a retail investor, and it's not fun. I'll tell you, Max, it's not fun to be on the other side. All right. So we have this thing we do at the end of, or the kind of nearing the end of our Verified Market Insiders. It's called Rapid Fire section. So I'm going to give you just 2 or 3 questions. It doesn't have to be too lengthy of responses, but we're going to have a little bit of fun. I mean, we've had fun so far, but this is going to be even more fun. Are you ready?
Oh, great. Yeah, let's do it.
All right. So I see that helmet behind you, and I'm hearing that you're also an amateur race car driver. Does that trading and driving kind of go parallel? How's the feeling of either of those?
So it absolutely does. There's a lot of parallels. I could spend a lot more than just a few minutes on that, but I'll give you a quick one, which is data. So a lot of times when I'm in my trailer, my race engineer will come by, look at my laptop and ask me if I'm looking at my car squiggly lines or my market squiggly lines. And that is absolutely true. big data is as important when I'm evaluating if I was just a little off on my brake pressure or if my camber is off on my front tire, as it is when I'm evaluating whether a particular company is shedding its operating margin or a certain market is seeing higher core inflation.
Wow, that is really, I did not know that you had the braking pressure and driving makes that much difference in timing. I mean, yeah, the market.
Yeah, a quarter of a second in the turn, it can be huge.
Holy cow. I mean, are you looking at things like, I don't want to go too far in, are you looking at things like weather and stuff too? Is that a big part of it?
We are, and I know you have a background in weather, and actually that is, I mean, I'm, as you know, it's a huge thing in markets, but it is really important for racing as well. So we actually, before we come out, like we have to know which tires to bring, how to set up our allocations. I've raced through a thunderstorm, fortunately on wet tires, but you know, it requires a whole different prep for the car as well. So knowing how bad it's going to rain and if it's going to rain on one day versus another changes your entire strategy for the weekend.
I honestly don't know what's more scary, driving and racing through wet roads in a thunderstorm, or trying to figure out the market volatility and which way the institutions are going that day. That's wild.
You know, they're both unique. And I usually say that racing is not too high on adrenaline when you're actually racing. It's just, you know, almost like subconsciously, you know what to do. And then your conscious brain is trying to figure out strategy. Racing in a thunderstorm in an open cockpit car where you literally, the only thing I can see is the brake light of the car in front of me. There was a lot of adrenaline at that point. So that was a very different situation. That was closest probably in markets to trading credit derivatives in the middle of 2008, which I've also done. So I'd say like my BPMs were pretty high.
Holy cow, that's a lot of high heart. I feel like your watch is just going to be totally, like, you got to calm down whether you're racing or in the markets. That's wild. Yep. All right, so Bitcoin, $100,000 by end of 2026. What do you think?
I think that's not even my base case.
Really?
Yeah. Look, I mean, we had 125K in October, right, of this year. I think coming up to that level with all the strong, you know, macro support behind this is going to happen. So, you know, I would say my base case for Bitcoin at the end of 2026, and I don't like giving price targets too much, but I'll give one in this case. I would say we're going to at least get to that level. So I would say 125, 130 by end of 2026.
All right. That's interesting. A little rebound there from 2025's little dip, but all right. Think you can do it? We'll see what happens. And I also want to know, what's one asset class or investment theme you think is completely misunderstood right now? And I know we talked about blockchain a little bit, or digital assets. Is that one of them, do you think? Or, I mean, is it a completely different answer?
I'm going to give you a different asset class for this one. I'm going to talk about privates in particular, because I think the thing about privates that folks don't understand is the manager matters much more than the asset class itself can. And I'll actually use a racing analogy here too. So for those who are fans of Formula One, you know that we had Max Verstappen and Yuki Tsunoda in Red Bull, pretty much identical cars. Max was 2 points away from winning the world championship. Yuki did so bad he's not even on the team next year. And that is a good analogy to, say, private credit or private equity. Picking the right manager is so much more important in many cases than even picking the asset class itself. So we do think that privates have a really important role in investors' portfolios, but it really is a manager selection question. And I think that isn't quite understood very well.
That was a great analogy to help people understand, though. I really like that. All right. One last question for you, Max. If you could give one piece of advice to your younger self as an investor, what would it be?
It would be to not be afraid to pivot, to not be locked in. You know, when I started my very first hedge fund, I really thought like, hey, I'm a quant macro person and that's all I'm going to do. I learned later that actually I have to inject some fundamental research into what I do. This was right around when we ventured past the zero interest rate policy with Mario Draghi post the financial crisis. And then I learned that I had to actually learn how to build tools with artificial intelligence and try that out. And what I've learned is every time I pivoted, even if my pivot didn't result in exceptional performance, it brought me a lot of useful lessons that later did result in great performance and really a boost for my career. So I would say the number one thing I tell myself and I tell any other investors watching is don't be afraid to try something new. Don't get locked in on rails.
That's a really good piece of advice, especially for how quickly, you know, things are changing within all the classes. And I really appreciate you spending as much time as you had today talking with us. I mean, you've had a great macro picture as well as Franklin Templeton's vision for where digital assets fit into institutional portfolios. So we really appreciate you joining us. But before you go, where can people find you or Franklin Templeton if they want to learn more?
Sure. So we've got a really cool website called futureportfolios.com. I would really encourage people to go check it out. We talk about the change of asset allocation from the past to the present to the future and how blockchain and privates are actually going to fit into that vision. And if they want to find me, you can go to maxgachman.com, which takes you right to my LinkedIn page. That's the primary way in which I communicate with my audience. So please follow me there, and it'll be great to continue a discussion with everyone.
Absolutely. And we're definitely going to put those links below. And if you've liked our video, please like and subscribe to Verified Investing as well. You can find all Max's information below. Max, thank you so much for joining us today.
Thanks so much for having me. It's been a blast.
Biographies of themselves so we can actually really get into the meat of the conversation. So, Miles, why don't we start with you?
Sure. Hi, I'm Miles Harrison, Chief Product Officer at Amina Bank. We're a Swiss crypto bank, but operating globally out of our licensed regulated hubs in Abu Dhabi, Hong Kong. We just announced 2 days ago we've obtained our MiCA license out of Austria. And also a few months ago, we were the first global bank to support RLUSD.
All right, Martin.
I'm Martin Brunko. I'm the CEO and founder of Schumann Financial. We are the largest independent Euro stablecoin issuer. We have a license, MiCA license in France. We're also an EMI, so we can process payments, and also have a MiCA CASP license in Czech Republic. Yeah.
And Chris?
Chris Knight, LMAX Digital, Managing Director and Head of LMAX Digital. We're part of the LMAX Group, which has been around over 15 years, and it's institutional-only execution venues for foreign exchange and digital assets trading. About 35% of our clients trade both FX and crypto today, and we're laser focused on trying to bring the others into the crypto world.
Amazing. So we've seen stablecoins evolve from these sort of crypto native utilities to instruments that are at the intersection of all payments, banking, capital markets. I'm interested in how each of you are defining the role of stablecoins today. What are you seeing as the opportunity? We'll start with you, Miles.
Yeah, from our perspective and how our clients use stablecoins at the moment, of course, one of the key use cases is a bridge between TradFi and DeFi. So it really acts as that conduit between the two. We also see emergence of cross-border payments, which obviously a big theme, and you touched upon. Another area that we're heavily involved in at the moment is wholesale payments as well. We believe that stablecoins have the ability to really transform how banks and fintechs and other regulated FIs transact with each other. And really it comes to the heart of the benefits of using blockchain as a technology, but also stablecoins in terms of the programmability, particularly when we think about KYC, KYB, as well as the speed and the cost efficiency.
Just to follow up there for a second, I've spoken to a lot of people who look at stablecoins as really being an unlock for the B2B market, especially as on the supplier side. Is that, as interesting as the consumer side for you?
Absolutely. We serve, as well as individuals, we serve businesses, and we speak to many corporate treasurers at the moment. They're very heavily focused on that. So not just like crypto in general as an asset class that they want to bring into their company, but also how do they support, whether it's, supplier payments or the different activities. And of course, there's cost pressures in all businesses, and they want to look at how they can streamline and create efficiencies and reduce some of those overheads. So B2B is a big, as you say, unlock at the moment. Yeah.
Great. Martin, you guys have the Euro P, and you're an issuer. Do you look at stablecoins as is it infrastructure? Is it product? Is it an asset class? How do you define it?
It's in a way all of the above, but fundamentally we think of stablecoins as becoming the most essential core infrastructure of financial services. And the reason for it is that, we all in this room know that financial services are moving on chain. They will inevitably end up on chain because it's just a much better technology for moving and storing financial value. And in order to be able to execute and settle these financial services on chain, you also need an on-chain version of the currency in which they're denominated. And that's effectively a stablecoin. So indeed, right now, of course, the biggest and fastest growing part of those financial services on chain is payment. And there you can already see how extremely powerful they are. One of the things we have just recently launched is FX swaps into fiat, on-chain, off-chain. So you send us USDC, for example, less than 15 minutes later, you have Euro fiat in your account, vice versa. And we do this so virtually, instantly, and virtually for free.
Mm. And Chris, how is LMAX approaching this? Especially, I mean, you have an FX background as well. What's most interesting to you?
Yeah, so I think we're graduating now from experiments and proof of concepts to our clients are demanding enterprise-grade solutions, and that means that means a lot of things. It means regulation. It means deep liquidity. It means trusted platforms and systems. Putting all that together, and it does take time, but we're seeing a lot of banks now forming conglomerates to approach this, and we're doing similar. So we're trying to integrate it right the way through our systems to make it as seamless and easy as possible for our clients to trade stables.
Martin, I want to go back to you for a second. I'm interested in, we think about trade, we think about remittances, payments. I'm really interested in the fact that we're still a very small % of money being moved globally, but we're growing in the stablecoin business. How long before we enter a phase where stablecoins are truly representing a significant amount of the money going cross borders?
Well, they are indeed. We're just scratching the surface with stablecoins, because historically stablecoins have been almost uniquely used as an instrument for crypto trading and everything related to crypto trading, which if you look at that global financial services, it's really tiny. And so obviously the challenge for stablecoins was that the traditional financial services were not yet really being executed on chain. But I think it's going to be it's already becoming a very natural and I think ever accelerating process that with this move of the financial services on chain, the demand is going to explode. It's going to grow exponentially. And again, we see it in payments because this is kind of the obvious use case. Even though it's obvious, it took many, many years for us to get here, and we're still in the early stages. But I think once things really take off, we can speak about it more as, FX trading. Just because the traditional financial services market are so much bigger than crypto, right? I mean, if you look at the dollar-euro FX pair in fiat, the daily volume on that is almost an order of magnitude higher than all of the crypto trading of all of the crypto pairs on all of the centralized crypto exchanges, right? And that's just one single traditional finance product. So that just gives you a sense of how big stablecoins indeed will become this whole market once this transition of financial services on chain really fully takes off.
And Miles, as we look at the size of the way that Martin was putting that, I feel like settlement and the banking layer is really the one that starts to come into frame as where a lot of this is going to transact. I mean, do you think the banks are ready for that?
Are the banks ready for that? Probably not right now as we sit, but what I would say is there is a lot going on in the background, probably that we don't ordinarily see. When we think about cross-border payments and stablecoins as a use case, in that sense, we tend to picture it as individuals transferring money, or being able to pay for goods and services. But really, and I think, touched on that a little bit, that behind scenes, really, we need to reknit the fabric of financial services and how we move money between banks and other regulated FIs. And that will take time to change, but it is changing at the moment. And then we'll start to see that filter through to consumers.
And so, Chris, you've had a long career in this business. How do we engender more institutional trust in this asset that not so many years ago, people were labeling as suspect?
Yeah, I mean, if I'm being cheeky and an old TradFi guy, stablecoins in the past maybe was a parallel, shadow, riskier type of dollar. And, there's still that reputation in some places. That's why, stables like Ripple that are well regulated, where we're spending our time. There's a lot of work to be done there, and change, I think, happens gradually and then suddenly, and it's definitely coming. I have absolutely no doubt about it, but there's still quite a lot of work to do. We've got maybe stablecoins today are accounting for 1% of cross-border transactions, something like that. The other 99% is trapped in batch files and banking apps, and that will be released once we integrate to the systems and and really demonstrate that trust that will come with regulation.
Yeah, I think regulation is key here, right? Because look at.
I think that little tiny clip right there might be a good place to start off today's video breakdown. As he mentioned, once regulation is in place, everything's going to kick into gear full scale, which is going to take us back to the gentleman a second ago that we had streamed, Max Gochman, I believe his name is, from Franklin Templeton. So what is going on, everybody? Welcome back to another CyberX video breakdown. Let me just make sure that my microphone, see? Check it. Now you guys can probably hear me a little bit better. I needed to switch the microphone. So that gentleman right there was speaking at a Ripple Swell conference, and he just went on to reiterate that once regulation is firmly into place, everything's going to kick into gear and the institutions are going to get on board. He has a firm belief in that. So that's going to take us back to a video breakdown that we streamed just a second ago. Max Gochman playing some video clips from his segment piece in his interview. So in today's video, we're going to break down some important bullish signals that were recently shared by that gentleman, Max Gochman, from Franklin Templeton, in an interview that took place like the last week of December. And then we'll roll over into some technical analysis updates on Canton and XRP. Then we're going to dive deeper down the rabbit hole into some fundamental developments behind the Canton network that have recently taken place since we are now at the end of January. And take a look at just what they could mean for the future of institutional adoption. Now, before we get started in today's two-part video breakdown, my goal is to just help you guys understand the bigger picture and connect the dots and see where real opportunity may be forming so you can stay informed, prepared, and ahead of the curve. None of this is financial advice. And I want to say right off the bat that if you guys don't like certain digital assets in the crypto ecosystem, maybe because you haven't fully done your research on them, or maybe just because they don't sit right with you, don't invest in them. It's that simple. If you don't like XRP, don't invest in it. If you don't like Canton, don't invest in it. If you don't like HBAR, XLM, or XDC, or the tokenomics, or the team behind it, or whatever, don't invest in it. Nobody's forcing anybody in this community in the crypto space to invest in any digital assets, nor are we here at CyberX. And so we cover research across a multitude of different digital assets. With that being said, we are not biased towards any one particular digital asset. I hold a multitude of different digital assets across my portfolio, and we're actually going to dive into that in something that Franklin Templeton's Max Gochman said in his speech today, in his interview, where he goes on to talk about rebalancing your portfolio and not to get so attached to certain rails, having the ability to shift your bias if the environment calls for it. So with that being said, let's jump into today's video breakdown. We have some really great stuff for you guys today. As always, welcome back. We do appreciate the love and the support. If you guys are watching this on X, do us that favor and share this live stream so we can have more people jump on board. I'm waiting to see if Aqua is going to jump on with me today. He is having some family over, I believe, today. So I'm not too entirely sure if he's going to join us. If he does, he might pop up in the waiting room and I'll let him in. Outside of that, let's dive in. So let's just go back before we jump into the technical analysis on XRP and Canton Coin, taking a look at some levels and things that we were talking about in previous updates, picking up where we left off last. I want to take you guys back to this gentleman here, Max Gochman. His credentials at Franklin Templeton escape me. I believe he might be the digital asset lead or something like that of research at Franklin Templeton. Double check my work there. I just don't remember his credentials off the top. Actually, as a matter of fact, let's see if it's in the description right here. Matt Gochman, since the intersection of Wall Street, Franklin Templeton is executing. Let's see. Okay, he's the Deputy Chief Investment Officer at Franklin Templeton, and he said some very interesting things at the end of 2025 in the last week, heading into 2026, that I think a lot of us should be paying very close attention to. The first thing that I want to play for you guys is that 12 minutes and 50 seconds where he goes on to talk about how Ripple, i.e. he's meaning XRP, could become a large cap digital asset. Now, what he meant by that, again, I have no clue. I'm just playing interesting key vocabulary and highlights for you guys. Take that for what it is, coming from a large institutional player like Franklin Templeton. Take a second here and listen.
Can you dive more into that for me?
Absolutely. And look, I think we can actually have an analogy in the stock market. So there's pink sheets, right? The OTC stocks, the ones that don't really trade, that well, that are, priced really low, that can get delisted, et cetera. I mean, that's the altcoin world, right? That's the meme coin world. And then you got your blue chips, which would be like your Bitcoin, Ethereum, your mid caps like Solana and Ripple that might become large caps at some point. And so what I think retail investors, at least savvy retail investors, started seeing, and actually, ironically, now institutions are starting to see, is that cryptocurrencies, and really we should call them digital assets because a lot of them aren't currencies in any way, shape, or form. It's not a monolith. Digital assets are inherently an asset class that has internal diversification. And that's something we're looking at in terms of how we model those different assets and how we construct portfolios with them. And it's something that we're educating our clients on. But interestingly, a lot of the savviest retail investors that especially that have been in the space for a decade or more, they really get it now.
Yeah, and you are there.
Right. So that was really cool. What's going on, Aqua? I'll jump Aqua up into the stage right here in just a second. But the gentleman here from Franklin Templeton, in a nutshell, just said that Ripple, Solana, and other altcoins could become large caps, i.e. blue chip digital assets in the future, which again is just, key vocabulary to pay attention to coming from an asset manager like Franklin Templeton, who also has investment and partnership in Canton Network, right? So just be mindful of that. I find that to be very interesting, considering that we're talking about diversification. We are well diversified here in the CyberX community. We're not opinionated or biased towards one rail or one digital asset or one blockchain. And we just keep a very open mind. Aqua, what's going on, brother?
What is good, bro? How you living?
I'm good, man. Good to have you, bro.
Yeah.
Right now, yeah, man. Just to catch you up to speed, I streamed 2 panel discussions today, and this one had some of the most juiciest stuff. This gentleman is his credentials escape my mind again. He's a representative from Franklin Templeton named Max Gochman, and he said some pretty bullish stuff that I want to just reiterate to our followers. So just feel free to jump in commentary if you have anything to say after I play some video clips that he
Let's hear it. Let's run it for sure.
All right, cool. So the second video clip that I want to play is where they go on to talk about how you want to move with the institutional order flow and not after it or against it, right? So let's jump to 22 minutes and 50 seconds, because again, take in consideration where I'm pretty sure he goes on to talk about how once regulations are clear, these institutions, or excuse me, the gentleman before that I just streamed from Ripple Swell said, once institutions are clear, the floodgates are going to open and these institutions are going to onboard into the digital asset ecosystem. You don't want to be an industry participant after the institutions. Not financial advice. Again, do your own personal research, but you want to position yourself before the floodgates open, not after. Take a second here and listen.
Of Bitcoin trades, for example, are at over 100K USD. So these aren't small retail traders. I think there's a lot of compelling reasons for digital assets in 2026. And yes, regulatory clarity is a key theme. We are seeing more institutions come in. At this point, over 90% of Bitcoin trades, for example, are at over 100K USD. So these aren't small retail traders moving the markets. And I think that is a really important point. So as more institutions come in, you want to be on their side. It's a trade that's worked well in most asset classes. And from just, my experience, having a lot more institutions come to me and say, hey, how do we look at adding digital assets to our portfolios? How do we offer digital assets to our clients? And so I think that trend is going to continue. And it's going to be a global trend, not just the US trend as well.
Well, I tell you, Max.
He said global trend, not just the US. I think that's massive right there.
He said it's going to be a global trend. That's number one. And he also said that right now they have more institutions coming to them talking about allocating to the digital asset ecosystem, you know? So I try to play these video clips because, I mean, this particular video breakdown alone has less than 100 views. And look at the sentiment right now. You know, the sentiment is completely distraught. People think that crypto's dead again all of a sudden because we're seeing a pullback due to risk off sentiment. And that's not what the institutions are saying. That's not what the people that are actually allocating hundreds of thousands of dollars to this space, as you heard the gentleman say, that these Bitcoin trades aren't retail traders. They're not thinking that way. So how do we position ourselves as retail traders with the money? Now, right now, that money is risk off. It's temporarily not heavily invested into digital assets. But once the regulatory landscape has changed, and once the risk off backdrop has eased slightly from risk off to risk on, I have a firm belief that once we see these institutions flood in at scale, we're never going to see the opportunity below $3 trillion to get into this market again. Once we go 6, 7, 10 trillion dollars, what do you think, Aqua? You think we're coming back down to 2.8 to 2.7 trillion?
Hell no. It's a whole different ball game by that time. And institutions will be here by that time. And I don't think we're going to see it leave at all. And we've been saying that for over 2 years now. You might have been saying it even longer, but like, yeah, these prices, man, the window is closing. It's closing.
It's
I'll just say
opportunity
that.
of a lifetime. It truly is.
It is. Yeah.
Last two video clips I want to play for this dude so that way we can get off this gentleman. He just kind of goes on to reiterate the importance of rebalancing your portfolio and then not getting locked into specific rails and so fixated on one thing, and having the ability to adjust under certain market conditions, which is something that in the CyberX private community we have mastered and are still attempting to develop accurate and successful strategies in. I'm not going to sit here and say we're perfect, but across the board, we manage the volatility in the crypto asset ecosystem relatively well compared to other communities or compared to other investors. And that is because we're not biased towards one blockchain or one crypto asset. And we also have the ability to buy and sell strategically in the market via our institutional software at accurate levels, some of the most, if not the most accurate levels that are available to retail traders in the game right now due to the institutional software that my team and us here at CyberX Research have built over the past 4.5 years. It's not just some lucky coincidence. It's strategic implementation, paying attention to the right data, accumulating the right data, working with the right, coders and people that actually know how to code these things. And it shows in our community every single week, week after week after week. And we'll highlight some of those happenings right now. But I want you guys to actually listen to somebody with valid credentials say that rebalancing a portfolio in crypto is actually really important for long-term success. So take a second here and listen to what this guy from Franklin Templeton says.
Because of the volatility of the asset class, it's really important to rebalance your portfolio more often. And that should help you both tamp down your volatility over time and also should help you with returns over time. But if you're an investor who rebalances your portfolio once a year, if you're going to include digital assets, quarterly should be your bare minimum. And I would, in many cases with higher digital asset allocations, recommend a monthly rebalance as well.
Yeah, and like you said,
go ahead, Aqua. Looks like your eyebrows raised.
Yeah, he just said a monthly rebalance.
Yeah, man. And I mean, this goes hand in hand. Now, I wouldn't recommend rebalancing your entire portfolio. Actually, personally, I'm not a financial advisor, so I wouldn't recommend you do anything. But what I personally do and will strategically continue to do moving forward is a portion of my portfolio I have allocated to swing trading, right? Where because we have institutional software that highlights both buy and sell dark pools, at those buy and sell dark pools, I will shave off certain portions of my portfolio. For example, if I have 100,000 tokens of XRP and we go to an institutional sell dark pool at $3.82, I might sell 5,000 or 10,000 units of XRP to reallocate that capital in a pullback, still holding on to my long-term position, but shaving off some capital at the top at an institutional dark pool to reallocate and rebalance those profits into other assets that might haven't moved yet, or other projects that I firmly believe in are going to perform well, so on and so forth. And this just goes to show hand in hand that the strategies that we focus on in CyberX, where we're non-biased, we're non-opinionated, and we're able to adjust to certain market conditions and research other projects that other people otherwise wouldn't really give any attention to because they're so biased and opinionated on one specific project. This just goes hand in hand, and this is directly from an institution, not some average retail Joe. What do you have to say on that? Anything else before I move on?
My bad. My daughter was yelling right now. I didn't want to come off mute. Yeah, I mean, no, you can go ahead and move on. My bad. I lost my train of thought too right now. So.
It's all right, cool. I know your family's in the background. All right, cool. So next one that I'm going to play is, again, just kind of reiterating, not to lock into one specific chain, one specific rail, one specific talent, one specific anything, and just be open-minded in this space as time evolves. And this gentleman from Franklin Templeton reiterates that and stamps on that. Take a second and listen.
As an investor, what would it be?
It would be to not be afraid to pivot, to not.
Analogy to help people understand, though. I really like that. All right. One last question for you, Max. If you could give one piece of advice to your younger self as an investor, what would it be?
It would be to not be afraid to pivot, to not be locked in. You know, when I started my very first hedge fund, I really thought like, hey, I'm a quant macro person and that's all I'm going to do. I learned later that actually I have to inject some fundamental research into what I do. This was right around when we ventured past the zero interest rate policy with Mario Draghi post the financial crisis. And then I learned that I had to actually learn how to build tools with artificial intelligence and try that out. And what I've learned is every time I've pivoted, even if my pivot didn't result in exceptional performance, it brought me a lot of useful lessons that later did result in great performance and really a boost for my career. So I would say the number one thing I tell myself and I tell any other investors watching is don't be afraid to try something new. Don't get locked in on rails.
That's a really good piece of advice, especially for how quickly, things are changing within all the classes. And I really appreciate you spending as much time.
Bro, we were just talking about this yesterday on our Zoom call as a community. We had 50 plus people on that call. And the topic was being able to pivot, doing research outside of, your favorite crypto asset and accepting what is real, right? How many comments do you get on the Canton post of people fading Canton? I don't know how many Metallicus posts of people fading Metallicus because, I was always hooraying for XRP, but it's like, I've been able to pivot and understand that there's going to be more than one winner. And in my opinion, there are some projects that are, I want to say, light years ahead of others.
Yeah, man. I mean, I think, and I've always been a firm advocate of diversification being a key to a portfolio, successful portfolio in crypto. I mean, over the past, I've been in crypto since 2016. Bitcoin and XRP were my first two investments. I've held XRP in my portfolio since pretty much my first investment in XRP was sub 11 cents. And then shortly after that, sub 27 cents. So most of the XRP I hold is, still all, if not all, in profits outside of a couple $1,000 that I've dollar cost averaging over the years. I'm a firm believer in XRP's price, just like everybody else, but I'm not afraid to hold other digital assets in my portfolio that have good fundamentals that otherwise might perform better in certain market cycles against certain narratives and so on and so forth. And I just think that marrying biases, especially if the bias that you once housed back 6, 5, whatever years ago, isn't the bias for this next cycle. We as retail traders are not about to drive this next market cycle. So we should position ourselves where the smart money is going to position ourselves, regardless of what our personal opinions are. And that's how I'm going to allocate into crypto this next cycle. It's going to be trailing where the institutions are going to allocate into, regardless of my personal opinions. So yeah, that's it for those couple of video clips. I just found that to be very knowledgeable and informational. You know, he went on to mention that XRP, including different other altcoins, could possibly become large cap blue chips in the future, which is super bullish. I love to hear that because I hold a fat bag of XRP. He talked about rebalancing your portfolio, moving with institutions and not against them, especially once regulatory clarity hits, and then talked about not fading diversification and having the ability to adjust biases and not marry opinions, right? So great stuff from a traditional financial investor at Franklin Templeton. Moving on to the second portion of today's video breakdown, I want to first go over some recent technical analysis developments on both Canton and XRP, just to show you guys how accurate the software that we built here at CyberX is, and get you guys to see that you all have access to this. The level of accuracy that we've achieved here at CyberX is available to all retail traders. And it's actually pretty insane how many individuals on the internet haven't really woken up to the fact that this really does exist. It exists, it's available at your fingertips, and all you have to do is, again, lock in with a community that has access to this type of data and has built the software and the tools over the years, put in the elbow grease, literally hundreds of thousands of dollars myself and my team have committed to the development software that we have built, not even exaggerating, probably over $1 million to build this software. And it works. It finally clicked and it works, and it's insane. And we proved that time and time again. So let's just pick up where we left off. This was our latest Canton update from January 22nd, 2026. I want you guys to really focus on how we're not just calling out levels, we're calling out sub pennies to the freaking pip. Okay. So I said here, if the 15,237 cent psychological level holds and turns into support, the next levels that we're going to be focused on for Canton's price are going to be the 18,194. And this was a typo here. It was supposed to say the 21 cent 363. A lot of people took that as $21,000. That was wrong. I just missed a decimal point. But nonetheless, the 18,194 was the next area of interest for our targets and profit taking on Canton Coin. Now, we also committed some technical analysis on XRP and mentioned that if we broke the $1.84 range, we would likely drop down into roughly around $1.69 to $1.70 on XRP. So now if we go over, keep in mind, again, this was from, what is this, 8 days ago. This was 8 days in advance. We called this level to the freaking T, and it's not by accident. It's not to flex or say that we're the best or anything like that. It's just to show you guys that if you want these levels and you want to stop paying attention to all the unrealistic, hypey price predictions and retail technical analysis that exists out there on the internet, you guys have access to institutional technical analysis via our institutional scalper with over 13 years of hedge fund experience. He's not just some random dude. Dude is a multi-millionaire, and he's in our private community and everybody has access to him. It's actually pretty cool. So coming over here first, taking a look at Canton's price action. Canton hit a new all-time high along with gold and silver over the past 48 hours. And would you look at the level that it tapped straight into? We traded from the 15,237 cent psychological level area of consolidation where price ranged for a couple of days. We retested it, turned it into support, and we came straight up into the 18,194 to the almost exact pip, right? That is insane. And we gave this level to you guys 8 days in advance, right? 8 days in advance. So if, again, you guys want access to that accuracy, head over to cyberxtrading.com. We'd love to have you on the team. What's next for Canton's price action? The question now is, can we turn the 18,194 into support? Can we see buyers trap sellers and become aggressive above this level? If we can, we are expecting some higher prices on Canton of anywhere between 21 cents to the highest institutional sell dark pool on our radar right now at 27 cents. If we cannot turn 18,194 into support and we start to see sellers trapping buyers at highs and becoming aggressive and pushing Canton's price back down into the lows, the 15,237 remains as the next support on our radar. And if we break that, then that will open the door for a deeper retracement and deeper levels on Canton to come into fruition. Below the 15,237, we still have the 11,356 on our radar, the 0,999, the 08237, and the 0655 for some possible dollar cost average levels on Canton if we ever do see a retracement. Personally, that's what I'm counting on. Dang it, I'm not sharing my screen. I wish I totally was, but I wasn't. Sorry about that, guys. Anyways, you guys got the levels. That's for Canton. Heading over real quick to XRP's price, because I don't want to bore anybody to death going over technical analysis. In previous video breakdowns, again, we mentioned if we broke below the 184 psychological level, that we would likely come down close to the 169. Right now on XRP's price, you can see that that is almost to the exact pip where we came down into, and we are now starting to see buyers throw up a passive defense. The question now is, can they trap sellers, become aggressive enough to break back above the $1.84, turn that into support? And if we can see that, then the next area of interest to break above on XRP is going to be that $2.05 threshold, where the aggressive seller sits over here that I showed you guys on the order flow a couple days ago. If we can break back above the $2.05 threshold on XRP and turn that into support, that'll open the door for some higher price levels on XRP at around $2.27, all the way up into highs of $2.56 before we start to see some profit taking at some institutional sell dark pools. To the downside, if the current sentiment on XRP or in the total market environment does continue to diminish and we continue to see a risk-off backdrop, if we break below $1.69 on our radar to the downside, we have $1.39 all the way down to 98 cents on our radar for some possible targets to accumulate some more XRP. All these levels and updated technical analysis are inside our private CyberX community. We host Zoom calls all throughout the week, breaking this stuff down in real time for our community members. Again, you guys can tap in with us in 2026. Test this stuff out yourself. Try it out for a month. You can always cancel your subscription in Discord if it doesn't float your boat or you have no idea what we're talking about. But I guarantee you, when you guys come into the community, you won't want to leave. We have people that have been in our community. Actually, I'd say over 300 to 400 members that have been in our community for over 4 years. That says a lot. All right. So now that the technical analysis aspect is out of the way, let's transition into some recently developed fundamentals on Canton. Again, I'm not biased towards Canton. I've just been doing a lot of research on it because I was lucky enough to get in on Canton at, I'm not even going to say luck because it wasn't luck. We've been tracking Canton since 2023. We were waiting for the coin to launch. Once it launched, we were able to get in institutional deltas at the 0.5 cent range. And since then, price has rallied over 225%. So super bullish on Canton still. Loving the project so far. And I love all the fundamental developments. It's such a fun project to research as the rabbit holes go so deep. So let's cover some of that research today. Aqua, feel free, bro. If you have anything you want to say, you can jump in at any time, man. The floor is yours if you have anything to comment on as I'm reading through this stuff. Let me just zoom in so that you guys can see. Go ahead, bro.
Canton. I was just going to say Canton, AKA 33.
All right, cool. All right, so first, Mark Bowman puts out really phenomenal posts on LinkedIn, and this one caught my attention, and it's going to take us down the Canton rabbit hole today. He's the founder of 51 Group and the chief growth officer at DFNS. DFNS, mind you, also sits on the Canton network ecosystem as a Canton validator. Justin BlackRock just took a $100 million stake in Canton, and no one is talking about it. BlackRock has secured a 2.2% stake in Theramune, the only publicly traded company building a Canton coin digital asset treasury. 765,000 shares filed a Schedule 13G passive position, ordinary course of business. But here is what that filing actually means. Theramune Inc. raised $545 million from ARK Investment, DRW, Kraken, Polychain, and Broadridge to acquire Canton Coin and operate as a super validator on the Canton network. This stake means BlackRock now indirectly owns an estimated 75 million to 120 million Canton Coin. BlackRock's position equals $100 million in Canton tokens. Why Canton? The Canton network is not a startup blockchain competing for TVA on DeFi Llama. It's the privacy-enabled settlement layer that Goldman Sachs, DTCC, BNB Paribas, Citadel Securities, and Euroclear are betting on. We're going to come back to Euroclear today. with $9 trillion in monthly transaction volume, and it doesn't stop there. On December 17th, DTCC announced it will tokenize U.S. Treasury securities on Canton, the same DTCC that custodies $100 trillion in assets, the same DTCC that processes $3.7 quadrillion in securities transactions. The DTCC, that is such a fucking shit acronym to say 5 times fast, also co-chairs the Canton Foundation alongside Euroclear. The 2 largest post-trade infrastructure providers on Earth now write rules for the tokenized future. What most don't talk about, this is where it gets interesting, raised $135 million in June from Goldman Sachs, DTCC, Citadels, Securities, Virtue Finance, and more. The investor list reads like the cat table of global finance. The question nobody is asking is, why would BlackRock take even a passive position in the only public vehicle exposed to the blockchain that DTCC chose for treasury tokenization? Spoiler, it's not a coincidence. And I highlighted that right there because of something that the CEO of Theramune said on a panel discussion. So again, he said, spoiler, it's not a coincidence that they did this, invested in Theramune. And if we come over here to this panel discussion, where on the Crypto Mavericks YouTube, shout out to the Crypto Mavericks for this podcast with the CEO at Theramune, listen particularly to what he says, how this was all intended. This was all on purpose. And just pay attention to what he says here. It's pretty mind-blowing. Take a second here and listen.
Things evolve, but we're very excited about where Canton is positioned today. And I think you'll see, again, things transform from, pilot to really live and scale. So I think as you see more regulatory, whether it's the SEC, CFTC announcements of various different things, that's where you're going to see more institutions be able to dial in. I think, why Theramune as an equity as well is important to think about, because there are certain institutions that still can't hold cryptocurrencies. And that's an element as well that I think will continue to evolve, where you're going to have that more of an acceptable investment across the ecosystem. So, those are where that I would continue to look at what's the size and scale of real world assets and transactions that are going on top of these chains. Look for different regulatory tweaks from going from pilot to actual live, and then continue to see who's announcing that they're participating. So we've had some pretty big ones in our ecosystem over the last month or so, and we're really excited to see how it continues to evolve in 2026.
I mean, you guys have, there's tons of headlines that we could go through. Theramune raised $540 million in private placement. Some amazing things have been happening for your company.
Yeah, I think it was intentional. Like, this is 8 years in the making of getting to this point. And so, like any network, it's only as good as those that participate in it. And so you intentionally try to go after the right mix of players. So from a traditional finance, you have, obviously we talked about DTC, a CSD, the largest one out there. You have NASDAQ, US Equity Exchange. You have large banks. You got JP Morgan, you got HSBC, SocGen, BNP, Bank of America. You have large, banks on that side of it. You have Broadridge, you have Tradeweb. You have large institutional players. And then you have on the crypto sides, you have Circle, you have Copper, Custodian, Market Makers, Cumberland, Fireblocks. You just go through, and it was kind of intentionally trying to go out to the right disbursement of players to bring them into the ecosystem to strengthen the network. Because again, the network is only as good as those that are in it, and that's what we intentionally try to do over the last 8 years.
Yeah.
So dude just confirmed that what they've done over the last 8 years was intentional. So that is such a mind-blowing statement, okay? And this guy's company is not just nothing. Like, BlackRock just took up a stake in it. You understand how crazy that is, that he just openly admitted that all of this around Canton Network was intentional, not by accident. It's not random. It's not poof happening out of nowhere. He specifically said that this has happened over the last 8 years. So I see the narrative all over Twitter. People are like, oh, Canton popped up out of nowhere. And just recently, Canton even popped up above XLM's market cap. It overtook Zcash's market cap. It overtook AVAX's market cap.
It's at 17 right now.
He just confirmed that this is not random. This was intentional over the last 8 years. That is a lot of time in this game to finally see this all unfolding. And I just, again, to revert back to the first portion of today's video breakdown, diversification is key. It's almost like people are having a hard time dealing with the reality of Canton because they think it popped up out of nowhere. But in reality, it's just been moving in the shadows behind the scenes for years.
Have you seen that circle diagram with like all the super validators and all the validators, like all the big names?
Mm-hmm.
Maybe we should just pop that on the screen real quick to
go ahead if you have it up. I don't have it up.
I definitely have it up. Hold on, let me just share this real quick, give you guys some perspective, because this is huge. So yeah, and what I seen crypto.com is a super validator as well, right here. Boom, some big names: Franklin Templeton, like he had said, Copper. This is one hell of an ecosystem, and this is not one of those fake diagrams either, you know, that we see with other projects. Like, no, this is all real right here. So
no, it's actually Canton Network actually made that diagram, not some Twitter
This came exactly. Yep.
What I find interesting about Canton Network is that if you were to see these types of announcements and partnerships from Stellar or Hedera or Ripple, like the content creator Moon Boys would be going fucking nuts, bro.
Mm-hmm.
But you got Canton doing all this, and all you see is a bunch of trash talk. It's just weird. It's weird, man. It just doesn't sit right. It's super weird that people have this like negative bias towards things that are winning. Like, why you gotta be like that? It's just weird, man. It's like,
and none of us have publicly came out right and said like, oh, Canton is the best and it's better than this, and when you compare it to this, it's way better, and it's like we're not even doing that. But
not at all.
And I'm
because
seeing,
it's not our place to, man. It's not our place to, like, we're not fucking in some position to be like, oh, this chain is better than the others. So it's just weird that people on Twitter think that they have that position to be like, oh, this chain is better than the others, when in reality you don't. You're just we're all just little tiny ants. Not even ants. I would say if you have an ant and then you have a little tiny particle on an ant's butt, that's what we are. That's what we are. So like thinking that any of these people's opinions on Twitter actually matter in the grand scheme of things is so irrelevant. It's not even funny.
Yeah.
You know, like the guy from Franklin Templeton just said to you guys at the beginning of this call, diversification is key. Having the ability to adjust and shift the bias is key. Not marrying to one rail is key, right? And moving with the institutional order flow is key. Explain to me how people are fading Canton right now when over the last month, it is one of the only crypto assets that has actually performed well. And isn't everybody in this space here to make money?
Yeah, no, those are solid points, bro. It's that tribal mindset, though, that entraps people mentally, and they just think it's like, you know. Could you imagine too if they like? There'd be so many crypto fights if they had like a coliseum where everyone came and like wore their favorite crypto project and rooted for them.
I'll tell you what, man, they definitely need to. Yeah. I'm not even gonna feed into that negative energy because just the biased tribalism is nuts. It's really truly nuts, and it's even crazier when you start making content on another project temporarily because they're just cooking. They're cooking. Canton's absolutely cooking. Why would you not want to make some content on all the freaking massive developments that they've been? People just start to like you forgot about other projects. Like, nah, it's just that we're diversified. That's all. That's all.
Facts.
You know? That's all.
And we're not paid by these companies by no means to talk about them.
Dude, I
for the weirdos who I wish to.
I would enjoy sitting at my computer for 10 hours a day a lot more if I was fucking paid to do it.
Right.
Oh man.
Yeah, man.
All right, so back to the research. All right, I know we got on a little bit of a tangent there, and again, the negative energy is so crazy. And if you're watching, hopefully, I mean, I know the vast majority of our followers are not tribalistic; they're open-minded. We tap into that type of energy here. You know, we really truly do. I encourage you guys to just be open-minded, to take things that are said on Twitter with a grain of salt, and understand that these people on Twitter, even some of the best researchers in the game, we're just retail investors. Like, there could be a point in time where all of us are wrong. Has anybody ever considered that as a possibility? Where literally all of these financial conglomerates come together and they're like, fuck blockchains. We ain't using none of it. Shut it all down. Now, how possible is that? Not real. It's probably not going to happen, but it is a possibility that it seems like nobody is considered. You know,
nobody's considered that shit at all, actually.
Everybody just thinks that because we research documents and find these crazy videos that we're right about whatever blockchain we're talking about at that specific time. And that's not real. Like, what reality are you living in? We could all be wrong. All of us. Like, let's humble ourselves a little bit. You know, we could be. Hopefully we're not.
That would be one hell of a learning lesson. I ain't gonna lie.
You know, like all of them, every token out there. Imagine, you know, we don't know. Nobody does. And anybody claiming that they know that said blockchain is the chosen one is lying through their teeth, and they're making up beliefs to try to get you to feed into their narrative. And you need to make a decision as to, you know, what type of person you are and what type of content you consume. You know, that's all. That's it.
Yeah. Nah, facts. Yeah.
Over here I want to go back to something that the dude from Theramune said, because he was spitting facts. He particularly talked about how there are certain organizations that are sitting on the Canton validator list in the ecosystem that won't even touch crypto. And that just goes hand in hand with something that Eric here says from Digital Asset, where he specifically said that there are publicly traded companies and entities that have never touched crypto that are willing to hold Canton and participate in the network. And so I just, again, trying to get the brain juices flowing for you guys. Think about it. You have retail investors on the internet that have a Twitter account with like 200 followers, or even if they have 1,000 followers with no face. Like, I've seen people that have Twitter accounts with not even a profile picture that have like 300 followers will get on Twitter and start trash talking projects. You know, like, what credentials do you have? And then you have this dude right here who's been in this game building, has worked at financial institutions, and has been building in this space since 2014. And he says publicly traded companies and entities that have never touched crypto are willing to hold Canton coin. But some retail investor that has no credentials won't. There's a weird disconnect there. Get what I'm saying? Right? So again, our goal here at CyberX is to move with the institutions. And so if we find out that there's information that institutions that have never touched crypto, that means they don't hold Bitcoin. That means they don't hold XRP. That means they don't hold nothing. They don't hold nothing, but they're willing to hold Canton coin. That is a big statement.
It's a massive statement, like massive.
Toot our horn about how we did it. The results, I think, speak for themselves. Toot our horn about how we did it. The results, I think, speak for themselves. Launched during Gensler. Digital Assets headquarters are in New York. I've not lost a single night of sleep over this. We have publicly traded financial companies that have never touched crypto before, that were launch miners in the ecosystem. You know, there are people that participate in the coin, entities that participate with the coin that have never touched crypto before, and that's just like, yeah, this makes perfect sense. Actually, this is totally appropriate. We can participate, not just hold, but be active in this ecosystem. And it meant no pre-mine, no pre-sale, no ICO, no sale to the public, launching fully decentralized, so there are no centralized components. The foundation is actually governed by the community. The foundation doesn't control the network. It's one of many votes. There's so many different layers of decentralization built into its governance, and launched from zero. And all the coins that you see in distribution today have been earned by someone that did something useful in the network.
So that to me just speaks loudly. Take that information for what you will. And again, you know, I hate when you make research videos on certain projects. People are like, oh, you're shilling a project. No, absolutely not. Do not, I repeat, do not go buy Canton Coin. Don't buy it. Allocate zero capital to Canton Coin. I repeat, allocate zero capital to Canton Coin. I'm here just showing you guys research that is readily available to anybody that chooses to find it. That's all I'm doing. Not telling you guys to go buy Canton Coin or XRP, because we talked about XRP at the beginning of this video. Matter of fact, if you invest in XRP or Canton Coin, you're subject to lose all, if not, well, all of your money. It's all going to zero, right? Take that into consideration. Don't invest. I know what I'm doing.
Same here, bro. I know exactly what I'm doing.
You know, you got to know what you're doing, you know?
And I know what my ears heard and what my eyes seen. So,
and you also got to know your risk tolerance. You know, a lot of people don't take into consideration the level of risk that differs from person to person. You know, you don't know if myself or Aqua or anybody else on our team that allocates towards Canton is willing to expose ourselves to Canton, even though it may be risky or whatever, because maybe we made an extra $100,000 in a month. So we have that extra capital to allocate. For your personal situation, you might not. And so you might be a little bit more risk averse or prone to not take the risk. You have to do that, your assessment yourself. You know, you can't just go along. I'm not even going to go on a tangent. It's not worth it. But just, again, don't take research on Twitter as investment advice. It is just research. It is a possibility, not a guarantee. Nobody in this market can give you a guarantee. Not any researcher on the face of this freaking planet, because we are operating in an unknown environment.
yeah, it's well said, bro.
Scrolling down here, talking about research. There was a comment here that I wanted to address because Louis V here, the guy Louis said in a post, shout out to Louis for this one. He said, not a single person is willing to respond to the fact that Canton Network currently runs 7 transactions per second, which is false. What is revolutionary about it? If I wanted decentralized fair launch, I'd pick Caspa, not this project. You just heard Eric mention a fair launch. But I want you guys to actually listen to an institutional investor from Citi. His name is David Cunningham, I believe. Mind you, Citi sits on the Canton Network Foundation as a validator and a participant in many of their proof of concepts. And listen to David Cunningham himself actually tell you guys that TPS is not that important from an institutional perspective. Like, how mind-blowing is that to hear from people that think and fixate so much of their time and attention on transactions per second on networks, when in reality, the institutions themselves are not focused on that at all whatsoever. Listen to what David Cunningham here says.
David, yeah. Just on, I mean, it's a debate that often comes up, and it's often, like, I lead our partnerships globally as well for digital assets, and often when people are trying to sell solutions to the likes of Citi, they like to quote, you know, the transactions per second and 5,000, 6,000, 20,000. We're working on 100,000 this year, all of this type of stuff. To be honest, more than 5,000 transactions per second is not really necessary, except in real edge cases. So I think, just as an example, that I don't think the technology is the problem here. You know, I think you'll agree from Telcoin perspective.
David.
Now, that's not my personal opinion. That's the opinion, because he specifically said, I believe. That's the opinion of somebody from Citi, not CyprX, not Cyprus, Citi. So take that information.
Did he say that one of those people on the panel with him is from Telcoin? as
I
well. Did
believe
I
so.
hear that? Oh,
I
yeah,
believe
you have to
so.
send me this. Send me this video, please.
Yeah, yeah. It's from the Digital Asset London Summit that took place, I think, in October last year, end of last year.
Okay.
And this video has like not even 300 views, bro. Like nobody's seen this video. It just every time I hear things like this and I see it go against narratives that are circulating on Twitter, I'm like, man, I love the CyberX research team. The fact that we watch videos and based our investment opinions off of what the institutions are saying and not what the Twitter hype on retail spectrum world is saying is just such night and day difference. Because you'll people in the retail game will hear this and be like, no.
Yeah, facts.
TPS is important. But then you have Citi, where he literally just said, we have clients come and try to preach projects to us and say, oh, 10,000, 20,000, 100,000 TPS. And he literally just said, it's 5,000. That's good enough.
That's that marketing that other projects have done on social media. And, the retail crowd picks it up and hyper focuses on this is going to be, the reason why, or one of the reasons why this project wins. And to hear that, I mean, yeah, it changes my whole perspective on things as well.
A lot of again, focus, in my personal opinion, in this next cycle, from a retail perspective, if you're listening, needs to be on what the institutions are actually focused on, not what we as retail traders want the institutions to be focused on, because we can want them to be focused on the fact that said blockchain can 100 million transactions per second. But if institutions don't really care about that, then why are we focused on it? Question that narrative, right? You got to start questioning these things. So back to the addressment, because he said not a single person is willing to respond to this. If you just go read the documents, Canton is infinitely scalable. So here, this is the direct quote. It says, Canton was designed to scale far beyond 7 transactions per second by using multiple synchronization domains that process workflows in parallel, avoiding the bottlenecks of a single global state. This modular architecture allows it to handle much higher transaction volumes, efficiently making it suitable for large enterprise and institutional level distributed applications. So I cited this directly from the Canton DAML-based Ledger Interoperability Protocol white paper. You guys can go read this yourself. It is readily available on the internet. And I plugged this into Chat PDF and asked it some direct questions. So that way you guys can see my interaction. I screenshotted it. So again, let's just read thoroughly through this. So that way this is addressed, because the comment there from Louis was actually incorrect. And I'm here as an educator, just trying to show you guys that false information from people on the internet circulates. And again, it's everybody's due diligence to just go and read the documents themselves and bias and base their own opinions based off of their own research. So how does Canton and its unique architecture overcome the throughput limitations? It says, Canton's architecture overcomes throughput limitations primarily through the use of multiple permission synchronization domains, allowing workflows to process in parallel rather than through a single global ledger. By partitioning the global state into these domains, Canton enables independent workflows to execute concurrently, significantly increasing overall throughput. Additionally, multiple domains reduced communication latency and distribute load, preventing bottlenecks inherent in single domain systems. The design also permits spawning new domains for critical or high throughput workflows, further enhancing scalability without sacrificing privacy or security. This modular domain-based approach allows Canton to scale horizontally, handling higher transaction volumes efficiently compared to traditional single ledger architectures. So I said, how many transactions per second can Canton process? Now, the white paper does not even address this, so I don't even know where the 7 transactions per second theory came from, because the white paper itself doesn't even say that. What the white paper does not specify is that there is no exact number of transactions per second that Canton can process, because instead, it emphasizes that Canton's architecture supports horizontal scalability by developing multiple synchronization domains, which allows it to process workflows in a parallel environment and reduces bottlenecks. The actual transactions per second depends on the deployment specifics, such as hardware infrastructure, number of domains, and trust assumptions. Therefore, Canton's architecture is designed to scale with increasing workload, but a precise transactions per second metric is not provided in the document. So I asked the question, Does it mention Canton can scale horizontally, meaning theoretically it can scale to any transaction required of network demand? Yes, the white paper indicates that Canton can scale horizontally. It highlights that Canton's design allows for the deployment of multiple synchronization domains, which can process workflows in parallel, thereby increasing throughput and reducing latency. This modular approach enables the system to handle higher network domains by adding more domains on participants, suggesting that in theory, Canton can scale to meet any required transaction per second as network demand grows. And directly on the Canton Network website, it specifically highlights horizontal scalability and specifically says directly on their website, the Canton protocol has no upper bound on how many transactions per second it can process. It can be scaled to achieve any transaction processing speed. So I just wanted to give you guys that piece of research there. Moving on, we had some huge announcements this month as we're in the ending part of January 2026. We had Sumitomo, hopefully I'm pronouncing that correctly, Corporation launching a blockchain node on 3 different blockchains at the end of January: Ethereum, Avalanche, and Canton Network. This article and piece goes on to read from Sumitomo Corporation themselves. If you guys don't know who Sumitomo Corporation is, just real fast, Sumitomo Corporation, I'm probably butchering the shit out of that, I'm so sorry, is a massive Japanese integrated trading and investment firm with over 83,000 group employees, 500 companies, and 125 offices in 63 countries. 63 countries as of 2026. That is a huge corporation there, launching a validator node on Canton Network. They are a top-tier Fortune Global 500 company. It generates billions of dollars in annual revenue with a 2025 net income of $561 billion in yen and a 2026 market value of $48.1 billion. Just to show you guys the conglomerate that just announced a node validation on Canton Network. But this goes on to read, through these operations, Sumitomo Corporation is directly contributing to the decentralization of these global networks, including Ethereum and Avalanche, while building relationships with their foundation and ecosystem to develop and deploy practical on-chain use cases that are deeply integrated with our existing business line, including stablecoin-based cross-border remittance initiatives that are currently under consideration. Going forward, Sumitomo Corporation plans to expand node operations to additional high-impact networks while accelerating the creation of businesses-linked blockchain applications. So I like that there, where they go on to talk about that these aren't the only 3 that they're going to choose, but they are the first 3 that they chose, which is just phenomenal to hear. Gives me much more confidence that they are paying attention to blockchains that are doing phenomenal things in this space like Canton. Anything to say on that, Aqua, before we roll over?
It just sounds like they're about to have some passive income to add to that net that's coming in with these nodes. So
we had another one announce a Canton validator. Hex Trust announced their Canton validator supports in late January 2026. We know that Hex Trust is funded by Ripple. Ripple indirectly holds Canton, according to hypebeast.eth, as Hex Trust Series B funding include Ripple, XRP, Primavera Venture Partners. Welcome to the Canton XRP army. I personally don't like the dimension of indirectly holding things. I like direct mentions, but nonetheless, still cool to see another large organization conglomerate like Hex Trust, funded by Ripple, going in, running a validator node on Canton Network. Coming over here, this is where it's going to start to get interesting. We have this gentleman here, Glenn Hanley. Now, this gentleman's credentials go deep into traditional finance. So when he posts things on his LinkedIn profile, I pay very close attention. Glenn Hanley over here spent over 35 years in traditional finance. You can see he was and had executive roles as an associate director at Barclays, as a director at Commerce Bank, as a managing director and global head of G10 Rates Cash Financing Solutions and head of Repo at HSBC for over 16 freaking years. So I'm sure that this guy isn't just some random dude and probably has deep connections. And now he is currently a management consulting individual at SecFin Solutions. All right. Back over here to his LinkedIn profile, he just recently posted this 2 days ago. And he said the ECB just made tokenized securities eligible as Eurosystem collateral starting from March 2026, which is in 2 months. Huge announcement. Okay. If we come over here to the actual announcement from the European Central Bank themselves, you can see this is from January 27, 2026. Eurosystem is set to accept marketable assets issued in central security depositories, or CSDs. This is huge. Okay. Remember that acronym, CSD, using distributed ledger technology as eligible collateral for the Eurosystem credit operations as of the 30th of March, 2026. That doesn't mean it's going to happen, but that means that as of March 30th, 2026, it can. Massive announcement considering what I'm about to show you guys, that Canton is sitting at the entire architecture layer of all of this, okay? So mind you that announcement from the ECB themselves just came out. And if we go back over to this gentleman, Glenn Hanley's profile that he posted on this, he said, this is not a pilot. This is a central bank blessing the rails, okay? I repeat, this is not a pilot. This is the central bank blessing the rails. What actually happened? DLT issued securities held at CSDs like Euroclear. Okay, let's be mindful of that acronym right there. CSDs and this company, Euroclear. All right. And Clearstream will now be treated identically to traditional securities for central bank credit operations. Same eligibility, same haircuts, same liquidity access. Tokenized bonds can now be pledged for central bank money. The commercial case just got materially de-risked. The biggest objection to tokenized securities has always been, can I use them when I need liquidity? The ECB just answered yes. Distributed ledger technology securities now mobilize for repo and credit operations. No regulatory discount versus traditional issuance, and the Euroclear's DFMI and Clearstream's D7 platforms are now positioned as the aggregation layer. As we continue to scroll down, it says institutions still treating tokenization as experimental are running out of runway. The infrastructure is live, the regulatory framework is forming, and the collateral use case is proven. And I've shown you guys in multiple different video breakdowns how Canton Network has been the network that has proven that this use case works. The plumbing is changing fast. And then he dropped this infographic. Again, this is coming from Glenn Hanley, who has over 35 years of banking experience from the likes of HSBC, right? Barclays, all these companies and organizations that sit on the Canton Network's ecosystem, right? Looking at this infographic here, I noticed a couple of different names. So I posted this where I said this rabbit hole is actually really crazy. The plumbing is changing fast. So remember, this all can start to take place on March 30th, 2026. That does not mean that that is going to happen on that date, but it does mean that the ECB greenlit all of this to happen on that date moving forward. Look at the names here. So it says the progress of tokenization in European finance. It starts with the ECB distributed ledger technology trials. Then it moves on to Lloyds Bank's Tokenized Deposits as number 2. You guys can see that right here, right? In this little tiny infographic. Number 2, Lloyds Tokenized Deposits. Well, if we come over here to the 2026 announcement from January 7th, Lloyds Bank and Archax complete the UK's first, not the second, not the third, the first public blockchain transaction using tokenized deposits. Here it says, Lloyds Banking Group and Archax and Canton Network partner for globally pioneering transactions, successfully completing the first gilt purchasing using tokenized deposits. Tokenized deposits are the future of finance, transforming the way businesses transact. Lloyds has completed the first transaction of digital assets using tokenized deposits, a landmark for digital finance. For the first time in the UK ever, tokenized deposits have been issued on a public blockchain. This is also a global debut for sterling deposits. This achievement illustrates how tokenization can revolutionize traditional banking, turning real-world assets into digital forms that can be purchased, sold, or transferred instantly. And remember, what did the ECB just greenlight? Unlike private ledgers, the Canton Network, a public blockchain, opens up an opportunity for mass adoption across the industry due to greater accessibility while preserving confidentiality. And this isn't coming from any random person. This is directly from the LloydsBankingGroup.com website. Okay. This isn't some random like Cointelegraph post. This is coming directly from Lloyds Bank themselves. The transaction involved Lloyd issuing tokenized deposits on Canton Network, a blockchain designed for regulated financial markets. Lloyd's Bank Corporate Markets, part of Lloyd's banking group, utilized these deposits to purchase a tokenized gilt from Archax. Archax then moved the underlying funds back into its regular Lloyd's account, showing how easily transactions can flow between blockchain and traditional banking systems. With the UK government exploring the possibility of issuing its own digital securities, this transaction demonstrates how tokenization can bring traditional instruments such as gilts into the digital ecosystem. All right. And again, mind you, the reason why I'm even reading this Lloyd's Banking Group document is because this gentleman, Glenn, what did he put as number 2 here? Lloyd's Tokenized Deposits. Well, we know Lloyd's Tokenized Deposits just happened with Canton Network, right? Well, let's continue. What's listed as number 3? Number 3 here is the LSEG Dish launch. You guys see that right there? I highlighted it in this post so you guys can see it more plainly. Number 3, next on the highlight, is the LSEG Dish launch. Do you find it a coincidence that if we come over here to January 15th, 2026, what recently took place? It says, January 15, 2026, Digital Asset, in collaboration with a consortium of leading financial institutions today, announced the completion of the third set of transactions on the Canton Network. This is the latest set of transactions that marks a major milestone for the industry working group, spanning across cross-border intraday repo activity across multiple different assets and currencies and leveraging tokenized deposits. At LSEG Digital Settlement House, or LSEG Dish, they were the ones to provide greater liquidity options. Members of the working group focused on advancing on-chain initiatives with new members, Euroclear, Euronext, LSEG, and Treasury Spring. Multi-asset and multi-currency versatility paired with cross-border mobility. So what did this enable? It says right here, European government bonds, US Treasuries, Euro cash, and US dollar cash for the first time. Okay, again, that's now the second document that has said that this has happened for the first time. Not the second, or not on any other blockchain, on Canton Network. For the first time, intraday repurchases transactions were conducted cross-border using multiple currencies and multiple asset classes. Expanded participation. The working group welcomed additional institutions, LSG, Euroclear, Euronext, underscoring traction across European markets. And what did the ECB just bless off? Tokenized deposits, right? Come on now, guys, tap in, pay attention. By using tokenized commercial bank deposits instead of stablecoins, i.e. CBDCs, the transactions create a true on-chain cash option. LSEG Dish allows users to instantaneously transfer commercial bank deposits to any member of the Dish network, tokenizing actual cash, which is transferable 24/7 in real time. These deposits were tokenized on Canton for use as a true cash leg of each intraday repo transaction. This transaction demonstrates increased global collateral mobility in action. It says the working group will continue to collaborate in additional groundbreaking on-chain financing initiatives in 2026. If we go back again, so now we've covered number 2. We saw how number 2, Lloyd's Bank, tokenized deposits, involved Canton for the first time. LSD Dish launch at number 3 involved Canton for the first time. Now, what's the CSD layer down here? Look at this. It says the CSD layer and highlights Euroclear. Okay. Well, do you find it another coincidence that if we come over to the Euroclear's LinkedIn profile from 1 week ago, what did they post? We are pleased to contribute to the continued momentum on the Canton network. We're a third set of on-chain repo transactions, or where a third set of on-chain repo transactions has now been successfully executed. Each milestone brings us closer to scalable 24/7, always-on capital market infrastructure. Then if you come over here directly to the Euroclear.com website, this is from last year, Euroclear and Digital Asset set to mobilize collateral assets. Digital Asset and Euroclear start the first project phase, not the second, not the third, again, the first, to increase the mobility of collateral assets through the Canton network. Right down here, it says, we are excited to collaborate with Euroclear on this initiative to explore the future of digital collateral mobility, said Kelly Mathiasen, Chief Business Development Officer at Digital Asset. The global collateral network has the potential to revolutionize collateral management by enabling real-time, compliant, and interoperable asset mobility across both traditional finance and digital markets. This is a significant step towards unlocking the full potential of tokenized assets across new crypto and capital markets. So this gentleman's post from 2 days ago showing the process of tokenization in European financial markets, every single step that I just showed you guys that he posted, a gentleman with over 35 years of traditional banking experience, has everything to do with Canton. I'm not making that up.
You didn't make that up.
I'm just showing you guys the information. Take it for what you want to take it for. Right?
Yeah.
I rest my case.
Yeah, dude. Man, I can't personally fade Canton. I can't. So that's why I hold the bag that I hold and take advantage of the rewards while I'm holding it. And if we do decide to pull back, I will be buying more, but I'm okay if we don't either. So
I hope we pull back. I've been praying every night to the Canton gods to freaking sell their bags, you know, but it just doesn't seem like it's that, like it's going to be that way right now, you know? One thing I will say is that Canton has never had a bull market ever, you know? That's something to consider.
Yeah.
I'll let that breathe.
Yeah, that's a lot to consider, to be sure, man.
But yeah, this was a really great video breakdown today. I love doing this type of research, even though that, you know, on the internet, there's so much scrutiny when you do research on different projects. People think you're opinionated and biased towards one. We're not here in the CyberX research team. We're open. We're not tribal. I mean, there's even some people in our community, there's mentors in our community that are ETH max. I wouldn't say ETH maxis, but their biggest bag is Ethereum, you know, because they're super bullish on ETH. So I love the diversification in our community, and we're going to continue to just fixate our attention on research, not opinionated, biased bullcrap. Remember that Canton is not going to be the chosen blockchain that's going to rule them all. There's going to be an interoperable future, a multi-chain ecosystem where multiple different blockchains are going to survive in the future. And we're all here as retail participants to try and assume and guess which ones those are. My guess is that Canton fits the role of one of those blockchains that is going to be a part of the financial future. Not the only one, but definitely one of the ones. So I rest my case. Blessings to you guys. If there's nothing else, Aqua, that you have, man, I will see you next week. Enjoy your weekend. Everybody watching, enjoy their weekend. Remember that all of this research and much more can be found inside the private CyberX Discord. You guys have access to some of the most, if not the most, I'd honestly say the most, but I don't like sounding arrogant, the most accurate institutional levels on the face of the retail space via our institutional algorithms and software that we built over the last 4 years, spent hundreds of thousands of dollars trying to orchestrate to perfection for you guys, and that has finally paid off and worked. We have physical timestamps and proof of all of that taking place. You guys can access all that information inside the private CyberX Discord. We'd love to have you on the team. Zoom calls all throughout the week. Aqua, how many Zoom calls do we host throughout the week? Like 5, 6 Zoom calls?
Yeah, minimum 4. So yeah, say like on average like 5 or 6. If it's a holiday week, like 4. But yeah, when things are moving and grooving, 5 to 6, sometimes even 7, because there'll be like you'll do another pop up, randomly as well. So
we got everybody in the community learning digital skills. Everybody's on the trading bandwagon now, man. People that I didn't even think would be trading in our community are trading now, catching banger trades, dude. It's so crazy.
Making trades, making that money in DeFi, and everyone that's listening, if you have digital assets that are just chilling and you're not putting them to work in DeFi, I would start doing some homework and due diligence. Tap in with us, the Wealth 28 Club,
110%.
Get those digital assets working.
Blessings to you guys. Everybody take it easy. Have a good, productive weekend. Be productive. Don't take the weekend off. Don't look at it as an excuse to be lazy and relax. The weekend is the time for you to propel amongst or ahead of the vast majority of the population that looks at the weekend as time to take off. Study, get your breath work in, get your exercise in, make sure that you guys are reading, make sure that you guys are enlightening yourselves, make sure that you guys are watching good content and information. Remember that you are what you soak up, you are what you eat, you are literally a reflection of your habits, of your actions. So if you're not making money in this space, if your portfolio is down, if your brain is all miscombobulated, then you really have to come to a point in your life, in your career, where you have to ask yourself, what am I doing wrong? And it's most likely what you're consuming, right? Because you are a direct reflection of what you consume, of the habits that you contribute yourself to on a day-to-day basis. So just thinking that, consider that over this weekend. Many blessings to you guys. Hopefully we'll see you in the community starting next week on Monday. Everybody take it easy. We got February to slam.
Peace. Much love, everybody.